the hockey stick run that we saw in silver, those usually don't end too well for any commodity or even stocks for that matter. Yeah, I think all these ones that are taking the hit right now, that's exactly right. I think it's just a fear trade. People are running to the exits, thinking that this is the end of the world.
Gold and silver have had historical runs to unprecedented levels, gold topping at $5,500 an ounce, while silver topped at above $100 an ounce. Both metals have been falling all month long since the beginning of February. So what's next? Should we be concerned that this is the end of a rally, or are they just taking a pause before much higher prices? What does this mean for metals investors, in particular mining investors who have seen tremendous gains in their portfolios in the last year? Will these gains continue? Is momentum still on their side? Joining us to discuss this from an insider's perspective is Gary Thompson, Chairman and CEO of Brixton Metals. That's ticker BBB on the Toronto Stock Exchange, Venture Exchange. Welcome to the show, Gary. I've had you on before. Welcome back. It's always good to see you. The silver price has just been ripping ever since I had you on last. Welcome back.
Hey, David. Great to see you again. Thanks for having me.
Brixton has a very important drilling update that we need to share with the audience. But before that, tell us what's going on with the silver price. We're all very concerned that this is the end of the bull rally. What signs are you seeing that may indicate to you whether or not this is the beginning of another bull rally or the end?
My personal view is just seeing what's going on, and obviously we had a big run into the new year in 26. Those hockey stick runs. I'm gonna look at silver specifically. I mean, gold had a long run. And the hockey stick run that we saw in silver, those usually don't end too well for any commodity or even stocks for that matter. So I think a pullback was imminent. However, what we've seen happen in the Middle East, I think, is really the fear trade that we're seeing currently that's really driving people out of the equities and obviously the metals dropping. We looked at the US dollar strength, I think, as a result of that. Interestingly, result of the war, I think most people would think that gold should rally, including myself. I anticipated, well, there's a war breaking out in the Middle East, perhaps gold and oil should rally on that, which I think is normally the case on a safe haven, but that really hasn't been the case. But I think it's really the fear trade that's driving that situation that we're seeing now. I don't believe that that's a correction in the sort of fundamentals, certainly a correction in the pricing, and certainly discounting the equities. But I think the fundamentals that drove the metal prices higher are still in place, still intact.
It's not just gold and silver taking a breather. Copper has also fallen. It's a lot of the hard metals. And so we talk about raw materials being choked because the Strait of Hormuz is closed. Oil, obviously, a big one. Diesel prices are spiking because of that. LNG is hit as well because the LNG facility in Qatar, the largest in the world, was just attacked earlier this week. Fertilizer prices have shot through the roof. But why are hard commodities like copper, arguably one of the most important critical minerals alongside silver, why are they taking a hit? I'm guessing the Strait of Hormuz and the area there doesn't directly impact the shipping and cargo transport of copper and silver and other critical minerals. Is that correct?
Yeah, I think all these ones that are taking the hit right now, that's exactly right. I think it's just a fear trade. People are running to the exits, thinking that this is the end of the world. I don't think so. I think, we still need all these metals. In fact, if you look at the supply demand fundamentals, we're running into the sixth year of a silver deficit. So the production is not able to keep up with the current demand, and we've got continued strength in the demand side from for new applications for silver specifically. And I think that once this dust settles on this Mideast conflict, I think we'll see this resume. So my personal view is, although it may be tough to stomach, I think it's creating a exceptional buying opportunity for people that want to play this space.
Why is it that the deficit numbers have continuously gotten wider over the last couple of years? Was it just a issue of higher demand, or have mines just been running out of silver at a quicker pace?
Well, I think it's the supply part of the equation has not grown. If you count thrifting and recycling, we're at about 1 billion ounces of silver into the market. So it's being consumed more than we can produce as an industry. So that's the challenge. I think with these high prices, though, obviously companies are scrambling to get new supply online. But I think we're seeing tremendous growth from not only investment appetite, but from the industrial applications that we're seeing. And there's more coming. Like if you look at I think our deficit's going to only widen if you look at some of the new applications in silver batteries, the silver carbon Samsung batteries, solid state batteries coming in 27. Well, they're actually coming for gadgets in 26, but the real the real demand, I think we'll see out of that coming in 27. And I look at that as going, well, those batteries will likely replace lithium ion batteries. So you've got a battery that charges twice as fast, lasts longer, is stronger. It's just a better battery all around. Doesn't blow up. Can't burn it. Why wouldn't you want one of those in your car versus a lithium battery? So my view is that we're going to see continued strength from the demand side and slow growth on the supply side.
Here is something from Morningstar, and the title of this particular piece is Iran War Threatens AI Chip Supply as Critical Minerals at Risk. The global tech industry could be the latest to be hit by a protracted conflict in the Middle East, with fresh pressures on semiconductor supply chains potentially hampering the artificial intelligence boom. Says here, the longer this conflict persists, the more likely it is that some of the critical minerals the region produces that go into other supply chains, for example, helium in semiconductors, those start to emerge as a problem too. Helium is transported through the Strait of Hormuz, and the theory is, or the concern is, if this conflict lasts several more weeks and the Strait of Hormuz remains closed for several more weeks, these critical supplies won't reach chip manufacturers in time, and there's actually going to be potentially a forced shutdown, or if not shutdown, a slowdown of semiconductor production. Will this impact, if this were to happen, would it negatively impact demand for other critical minerals, including silver as well, Gary?
Well, I would anticipate that we're going to be faced with a significant supply crunch on pretty much everything. And we thought we had the supply chain problems around COVID. That could be small compared to what this might trigger. So obviously, I think everybody wants to see this thing sorted out sooner than later. Yeah, it certainly has a ripple effect. Plus, the price of energy. I mean, pretty much everything that we build relies on energy, and if we see the price of oil hitting to $300, talk about inflation creeping into pretty much everything. So it's certainly not a good recipe for positive economy, put it that way.
So ultimately, for silver miners, producers, and even explorers and developers like yourself, does it really matter if silver is at $100 or $70 or even $50?
I don't think it does. If you look at even a year ago, when I was looking at, wow, if we could get to $50 and hold $50, that would be golden. And I think that's kind of where we need to be. Nothing wrong with a $50 silver price. I think miners can make good money at that rate. So I think we're in good shape as the industry goes. It's just, what do we do with this equity market at the current environment?
Has the mining industry gone through major shifts in strategy in the last couple of months since silver has broken out above 35 first last October, then to 50, and then very quickly from 50 to 100?
Well, it's hard to model your mine development on a rapidly rising price. So I think if you look at the developers and the guys that are actually looking to build these things in the feasibility stage, they're using quite conservative numbers still. So the prices move too quickly to really capture that. So I think that's still in play. I think people will And obviously, if we have a sustained price, then that will change developers' forecasts on the prices that they use. But I think they're still using pretty conservative prices given the how quickly the price moved.
Going to your company in particular, which phase of the mine life cycle, let's put it that way, is Brixton currently in right now? And then we can talk about how this current environment is impacting your operations in particular.
Yeah, we're still in the exploration phase, so pre-development, working on, in fact, pre-resource. The project that we're actively drilling right now is called Langis in Ontario. It was a past producing high-grade silver mine. However, it does not have any current stated resources. So we're actively doing exploration drilling. Really, it's a brownfields exploration project around the mine workings, looking for material that they did not exploit. And obviously, we've been generating some spectacular drill results so far. And yeah, the plan is to drill that as much as we can over the course of this year, with a goal of establishing a maiden silver resource on that project.
Have you sensed a shift in sentiment from investors from a year ago versus, or just a couple months ago versus now?
Yeah, we certainly have. In fact, when we telegraphed that we were starting to drill on the Langis project in Ontario back in January of this year, we started to get some actually interest in our stock, and certainly with the results that we're now finally started to publish, been generating some, we'll call them, chart topping drill results. We've certainly been getting a lot of inbound interest from investors on Brixton, because we haven't drilled this project since 2022, and so it's we're certainly breathing new life into the Brixton Metals story just on these high grade silver hits.
So it's important to know, and I get asked this question all the time to me. What are some good hedges against equities volatility? And you think about the metals, but the truth is gold and silver have both fallen since the beginning of the Iran conflict on February 28th. Year to date, silver is down 5%. The silver ETF, which is a composite of different silver stocks, is down 1%. And the XPX, this S&P 500 index, is down about 5 to 6%. BBB, your stock is up 85%. So this is a company-specific event that must have driven it up, but it's been running up consistently ever since the beginning of the year. What happened between January 1st to late January?
Well, of course, we had the big run in the silver price, and like I said earlier, we started talking about drilling Langis. We did put out a news release that reminded people that we have this asset. And by the way, look at some of the results that we've drilled to date. And of course, so that's been part of it, I think, tied to the momentum we saw in silver. As a lot of people know, there's these high grade primary silver deposits are hard to find, and they're rare the type of deposits. So I think when you've got one that's got some high grade, I think people are taking note.
Okay. Tell us a little bit more about the projects themselves. This is Brixton's first appearance on this program. So give us an overview of the project locations, the kinds of grades we're looking at, and why these projects are unique.
Yeah, so we're actively drilling on the project called Langis. It's in Ontario. It's about 500 kilometers north of Toronto. It was a past producer of silver. In fact, it was operated by Agnico. Before Agnico became a gold major, they actually cut their teeth as a silver miner. And so they shut it down in 89 due to the $5 silver price that at the time. So it produced 10.5 million ounces of silver at about a 25 ounce per ton head grade. So that's Langis. That's the one that we're actively drilling and looking to bring a second drill in May, and really get a good amount of drilling on this project all year. That would hopefully be enough to get us into a maiden resource. Now the company has actually 4 projects. So Langis is the one that we're putting most of the drilling this year. We do have a project called Thorn. Has been the company's flagship project in Northwest BC. It's a very large scale project, a district scale copper gold system. So gold targets and copper gold porphyry type targets. And then we've got a couple of projects that we've farmed out to third parties. One called the Atlan Goldfields in northern BC that we've optioned out to El Dorado Gold. So they're earning in, and they'll be drilling on that this year as well. And then the fourth project we have is called Hog Heaven. It's in Montana, and we've optioned that out to Ivanhoe Electric, and they're actively drilling on that project. And that was an old high-grade silver polymetallic mine, but silver rich. Now they're drilling deep into the system, looking for the big copper gold causative porphyry there.
Brixton Metals reports record silver intercepts. Before we get into the numbers, maybe just explain from a layman's perspective why this particular drilling result is so significant, and why, importantly, why this type of result is rare in the silver industry.
Well, when we saw these results, we started doing our research and trying to find other comparables, and it was hard to find many of this caliber in the global context of silver drilled intercepts. So one, it's primary silver. So we see native silver as the main element here. So pure silver effectively, and the fact that it's a fairly broad width. So one way that is a good way to compare results to another is to multiply the grade times the length. It's called a gram meter estimate, and that's a way to normalize results trying to compare one to the other. So when you do that, and then you look at other intervals and you compare the gram meter interval, you can see that it stands out as one of the global significant silver intercepts of any company.
What does an intercept like this mean for the mine if it were to go to production? I understand that higher grade potentially means lower cost of production, as you have to sift through less byproducts to get to the actual ore that you want. So maybe just help us understand the economics of this type of discovery here.
Yeah, so when you have these kind of grades, you don't need a lot of tons to get a lot of ounces. So it's just a volume of, big ounces in a small amount of material. So you don't have to move as much material to get the value. So it would be considered high value rock. Of course, you need that tonnage. Ultimately, you need some tonnage, but in a scale of mining with those kind of grades, you don't need a lot of tons ultimately. So a few million tons, of course, of those grades would be amazing. But if you look back at the mine, the Langis mine, it ran at 25 ounces per ton head grade. So that's, high 700s on a grams per ton basis. And we hit some of those holes like that in the previous release that were, 720 grams over substantial widths. So, ultimately that's the kind of grades you want to see. You want to see high grades. And it's just going to be a matter of building tons around that. So that's what we're doing now. We're doing a lot more drilling, trying to obviously hit more like that. That's, what the problem is when you hit those kind of grades, now everybody wants those more of those kind of higher grades. Of course we do as well. But we'll just keep at it, and it's a really interesting project and deposit style. So we'll see what else we can come up with.
The history of the company, I'm going to pull up this slide here. The jurisdiction is unique. We have key partners that Brixton is involved with that we should discuss. And I think this will be a good time to also talk about the shareholder structure. So maybe you can give us some more information on these areas.
Yeah, so over the last number of years, we've been putting a lot of resources into our project called Thorn. And why is because, a few years ago, when we had, 4 projects, we had to make a decision, which one do we feel has the big scale prize? And we keep looking at this project called Thorn up in Northwest BC. It's a big copper gold porphyry district, which is what attracted BHP. So BHP came in 22 as a strategic investor. They took 19% of the company, and looking really for the copper. So they're there supporting us for copper and for the next copper deposits and potentially mines. So that's how that came about. And yeah, we've been working on there. We're still planning to do some more work on Thorn this year. It's a bit of a split between gold targets and copper targets, and again, advancing those towards a resource stage. So we're still in the exploration phase. We've got a lot of targets on that project, so we continue to work on it. However, if you look at net, we're looking at something like 15 to maybe 20,000 meters at Thorn. But if you look at Langis, we're looking at something in the neighborhood of 60 to 80,000 meters at Langis. So a lot lower cost drilling at Langis, given the great infrastructure we have there. So overall, just a lower cost, so a lot more bang for our buck at Langis versus Thorn, which is a helicopter and air supported drilling operation.
Your drilling operation, is that dependent on the price of silver? If silver goes up or down a lot, either way from here?
Well, I think it is somewhat connected because that drives investor sentiment. So, we're not cash flowing business, so we rely on investors for capital to explore and advance our drilling. So if investor money dries up, our amount of drilling dries up. If investor interest increases and we have better access to capital, then we would accelerate that drilling rate and the amount of drilling we'd do.
Generally speaking, as a CEO, how do you assess jurisdictional risk and opportunities when evaluating whether or not to pursue a project in that area? What are your criteria for opportunities to look for and also red flags?
Well, the first one is, can you develop a mine? Are they pro mining or are they not pro mining? So number one, if you find something, can you develop it?
What do you mean? Sorry, I don't mean to interrupt. What do you mean by pro mining? What does the government have to do to demonstrate pro mining?
Well, they have a favorable, maybe a favorable tax structure, favorable permitting timelines, nationalization. We've seen happen all over the world where governments take over the mining operations and effectively pick out the miners. So having an open arms for exploration and development. And capital is kind of like water. It follows the path of least resistance. So when you're looking at jurisdictions, how hard is it to work there, and compared to say others, and how quickly perhaps can you build a mine, and does rule of law apply, or is it just a renegade country that changes a rule changes rules every year?
That's one. Anything else you look at?
Certainly, yeah, permitting is a big one to, timelines to permit operations is a factor. Obviously, geology is, if you just take a step back, well, first off, as you look at the geology, where do you want to be? And then you start to layer in those geopolitical risks. Yeah, is there a risk that, you could get it taken away? So other factors, yeah, I mean, ultimately the deposits are where they are, so you really can't change the geology. So you have to go where they are, and so that's a big factor. I mean, those are the main ones really that you have to look for.
So how does Langis in Ontario check those boxes?
Well, Ontario's great. They've got some yeah, pretty stable laws to build mines, and they're creating new incentives. Taxes. Of course, in Canada, we have the flow through tax credits that we can utilize for investors, get the tax credits, and so there's more capital available for that. Certainly helpful.
What needs to be done from the junior side to attract more institutional capital, if that is a strategy overall for the industry?
Yeah, that's a good question. I mean, I've been an advocate of M&A. I think institutions struggle to invest in junior companies that have low liquidity. So you can maybe get in the company, but you can never get out. And so I think, scaling up as junior companies, I think, yeah, I think that's the thing that we could do as a group of junior companies is maybe combine forces to scale up and just become a bigger company and have better access to capital. So I'm a big advocate for that.
Is that the ultimate objective for BBB Brixton Metals to be taken out?
Well, you can never plan on that. I think the way I kind of look at it is that you build a solid asset in a good jurisdiction that somebody bigger than you will want to own, perhaps. And I think, we just have to continue to advance on the projects that we have and continue to de-risk them along that development curve. But our strategy has kind of evolved, and I think that we're kind of reinventing ourselves as we go, and this is a good example of reinventing ourselves, refocusing on Langis that never really saw the attention perhaps over the years. And I think looking at maybe, hey, wait, why not, build up a resource and move it along the development curve and move it into production. So I think those are things we never really thought about a few years ago about building the mine. But now we're thinking, why not?
And key milestones that investors should be watching for right now in the next 12 months. You just announced a major drill result. So what's next?
Well, I'd like to think more of that. I think in the short term, the balance of the year, it's going to be all about the drill bit. We're going to be unlocking shareholder value through drilling. And then, of course, going into 27, we'll be we are working on some like metallurgical analysis on these projects, because we do need to move them into a resource category and move them up the development curve. So looking for resource statements perhaps over the next year, and just moving them along the curve. So really, it's going to be all about the drilling, I'd say, for most of this year.
When do you think you'll be able to conduct a preliminary economic assessment?
For Langis, we're probably a couple years out on a PEA. But, one of the things that we are also looking at with the price of silver is that we've got some tailings at Langis that have returned with a handful of samples, half a dozen samples, between 1.5 ounces and 4 ounces of silver in tailings on patented lands at Langis. So once the snow peels off, we plan to go and do a tight grid on that, quantify how much silver is there. And that's something that could be quite an interesting benefit to the company once we know the numbers and have a better sense of, what kind of silver is there left and what do we need to do to recover that. And so we're looking at that. So that's another interesting little milestone that may come into play towards the balance of the year.
Can you just maybe educate us in a nutshell the entire life cycle of a silver and or gold mine, all the way from exploration to production, if that were the case?
Yeah, I mean, that's interesting because, well, there's a Lassonde curve, I think that a lot of people are familiar with. You start early. In some cases, you just have an idea and you go into an area because you like the geology. You decided that you like the country. So you got to figure out, is it good? You go out there and you start collecting really basic data like geochemistry, rocks and soils and silt samples, and you kind of usually start with a big area and you kind of whittle it down if you're doing a regional work. A lot of times companies will get a project already with a bunch of work on it. So, but let's say you're starting from nothing and you want to build a play, you like the jurisdiction, you start there, you start doing some geological work, you get geologists out there, prospectors, and you get the soils and the geochem data, and then usually there's some geophysics that comes into the play because geophysics helps you with the subsurface imaging. So you've got surface sampling from geochemistry and rocks and soils. You've got geology mapping if you've got exposure. You start to build a bit of a model and you have the right rock. So you're getting good geochemistry numbers. Then you get some geophysics on it. Does it match up with what you're seeing at surface? Can you start to build a model around what you're seeing? And that usually takes many years because you'll get those samples. You say you go out for a summer, you get that data. You might have to go back many years over and over and over just to get more data because you normally don't collect enough data in one season, perhaps. So once you get to the point that, okay, now you've got all this data that you're ready to drill it. So the goal is to get enough data and build the confidence. Okay, you're going to drill it now. So then you bring in the drills and they call it the truth machine because that really starts to tell the story of what you think you might have there. So you get drilling on it. Obviously, if you're lucky and you make a discovery, then of course you want to accelerate your drilling. Then you start bringing in more drills because one drill isn't going to do it. And usually big significant deposits, you might have 20 drills on it. And we've seen that with big exciting discoveries where, once you find something of significance, you want to get out as quickly as you can. Now, as quickly as you can is a function of capital and all those factors, but let's assuming that capital is not the issue. That still takes years and years to get to that point. So from what I just described, that could be a 10, 20-year process. If you're really lucky and everything comes together for you. Rarely does it happen in a few years. It usually takes a lot longer. So then once you've got that deposit, now you've got, a resource defined, then you start moving it down the development curve. As you mentioned, a PEA, preliminary economic assessment, gets done. Then you start to bring in some engineers and financial analysts to crunch some numbers. Metallurgical work needs to be done as you start to move it into more advanced stage studies or pre-feasibilities, the feasibility stage, and then you're getting into more engineering work, perhaps environmental and those kind of works. And that tends to be those tend to be rather the boring years in the life of a mining operation, because you're not drilling now. You've already defined the deposit. Now it's a bunch of engineering and permitting, and those typically are long drawn out quiet times, if you will, for the story. And then once you've got the green light on, okay, now you've got a robust economic deposit, assuming that you do. And now you're going to want to build the thing, and then you've got to raise the capital and perhaps a combination of debt and equity to build the mine. Then you start to procure developers and your infrastructure strategy, and maybe you have to build some road, maybe you need some power. So it really depends. Each project is different on those factors. And again, those timelines change. And then you've got to have, okay, now you're going to build it. What is your life of mine plan? What are you going to do after the mine is done? So there needs to be a plan in place for the afterlife of the mine, and reclamation and remediation and all that at the end of it. So, and everyone is different. Underground, open pit, deep block cave, and there's various different types of mines. And so it really depends on the commodity, deposit, and all those factors.
All right, final question. You've been involved with many companies throughout your career. You started your career as a geologist. You've worked on a variety of different projects before you eventually came into the C-suite, which is where you are now. And you've seen a lot of companies' operations. What has determined a junior's success versus those that have failed and just disappeared from the map?
Well, I would say persistence is one. Again, because these things take time, and it's easy to get discouraged in maybe a difficult market when the capital is not there. But I think determination and perseverance to hang in there when maybe things are tough, to keep at it. And I think the guys that do that tend to do well long term.
Great. Well, tell us where we can follow the company's news updates.
Yeah, have a look at brixtonmetals.com, and you can follow us on X and LinkedIn.
Okay, we'll put the links down below. Do your own research and due diligence on Brixton Metals. Lots of information there. Ticker is once more BBB on the TSXV. Welcome back to the show, Gary. Good to see you. We'll speak again soon. Take care for now.
Yeah, appreciate it.
Thank you for watching. Don't forget to like and subscribe.